Hi there, welcome to Kneppy Invest and welcome to the stock of the day, which happens to be one of my biggest holdings, Findi. Now, I did release my top 20 holdings yesterday, November 20. Actually, no, it would have been this morning, wasn't it? Yeah, this morning, and lo and behold, my second biggest holding released the half year results, and the market didn't like it. Share price down about 23%. But that's okay because I'm just trading this company right now, and share price has increased a fair bit over the past 12 months. In fact, it's gone from about 90 cents all the way up above 7. I think it might be about $6 now. So what I'm going to do in today's video is just go through their results fairly quickly. Now, this company is a financial services company. So they own quite a few like ATMs in India, and I'm pretty sure they have some payment services as well. In fact, yeah, they call themselves a fintech company, principally located in New Delhi, India. Our payment services are dynamic, offering tailored to one of the world's largest and fastest growing addressable markets. So I consider this company mostly an ATM service provider, and they are expanding, and I think they'll continue to expand over the next 5 years. They also will list on the Indian Stock Exchange. That's going to happen within the next few years. Okay, so the company did release their results today. Share price down 23.7%. The question I have is whether this is an overreaction from the market. Now, I am trading Findi, and I have not taken any profits. This could be the catalyst for me taking profits. And we'll have a look at the chart in a second just to see where the share price has closed in relation to support levels. Now, I think their results are less meaningful than the chart because the chart does tell me what the sentiment is in this company, and there is potential the sentiment could be shifting to negative, just potential at this point in time. I think trading on Monday and Tuesday is going to be quite important. But the market didn't like these results. And I think one of the reasons is the market is very short-term thinking, extremely short-term thinking. These results weren't probably, the underlying numbers weren't probably as good as expected, maybe. So revenue up by a little bit, a few $1 million. EBITDA 12.9 million, only up slightly. The company was not profitable or barely profitable. So I do think there could have been some questions about their numbers just for this year. But probably most importantly, and this is maybe something the market is, I wouldn't say it's missing, but the market might be skeptical about this point. They did say they're on track to meet their financial year 25 guidance. So they do expect the numbers to be skewed to the second half. In fact, if you do look at their presentation, no change in the guidance for this particular year. Now, there's one thing I don't like about the presentation, and I'll just show you that fairly quickly. So there's one thing I don't like about their presentation. I've got to find it fairly quickly. I forget exactly where it is. It's not that one. No, it's not there. I'm going to almost guarantee you, I'm not going to find it now. Oh, you know what it is? It's not this particular presentation. It was a previous presentation they did last week on the 18th of November. I think it was this one, a market presentation. Yeah. So there was one slide in this particular presentation I'm not a big fan of because I'm going to have to try to find it now. Yeah, it's this one here, financial year 25 guidance. They also have financial year 26 with this dashed line bar with no numbers attached to it. So if you look at that, you could say, well, they're expecting financial year 26 revenue to almost double to financial year 25. Possibly they don't expect the revenue to only increase $5 million because they have no numbers attached to that financial year 26 expectations. They just have a hollowed out a dashed line bar. And same thing is true for the EBITDA. If you look at that, maybe EBITDA is going to double in financial year 26. So the main thing is that they have not changed their guidance, but they do expect revenue and EBITDA to be skewed to the second half. And there is possibility the market could be skeptical about that, but I'm trying to remember, I think last year the numbers were skewed to the second half. But anyway, let's have a look at the chart. Is this a time to take profits? So there's me exercising some options at 90 cents back last in January. I think it was January 17 or January 18. So you can just see how the share price has risen over the past, or during 2024, from 90 cents to a high of over $8. Now, I did have a support level at $5.90. Lo and behold, the share price closed at $5.91. And the reason I put it there is you can see there was a little bit of a dip, and share price sort of was going sideways at this level and just above this level. So between about $5.90 and $6.50 for about 2 or 3 weeks, share price was going sideways. So that's a support level. We saw a lot of shareholders bought in that level, in that zone. And if we do see the share price drop below that, that would be negative. That would be a break of that support level. So that's why I'm saying the trading on Monday, next Monday and Tuesday, is going to be very important. If we see a lot of buying, if the market is overreacting today, and we do see that buying, that would be good news moving for Findi. But if the share price drops below $5.90, I will take profits. So that is my plan moving forward for this company. And I do think it's very important to have plans for all your holdings, no matter why you have bought a company, if it's a long-term hold or just a trade. Anyway, if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.